Hello and welcome. You're watching NDTV Profit, and today we are joined by a very special guest. Mr. Vishesh Srivastav from Temasek joins us. He is the Managing Director of the company's investments in India. Thank you so much, sir, for joining us. And we are having this conversation right on the back of the annual report that Temasek just released. And if I begin by asking you the simplest question first. So your India exposure has gone to 8% of your portfolio. 2 years ago it was 6, then it was 7, then it's 8. So there's clearly a bullish sentiment which I would say is slowly building up, but this is not happening in a vacuum. We know that your China valuations have slightly, China exposure has slightly been going down. So can you tell us what this implies for the company's larger global strategy as a Singapore-based investment firm?
Thank you, Agni. Thank you for having me here. It's a real pleasure. As you've seen in our annual report, we think that the world is in a very interesting place today. There is a lot of geopolitical uncertainty in the world. How it pans out is honestly anyone's guess. I think the way we think about our strategy and our portfolio is we try to increase the resilience of the portfolio. What that means is that we try to make our portfolio such that external shocks impact it less than usual. Also, the way the metric that we look at is that the range of outcomes from our portfolio should be narrow, right? It ideally should be a very predictable and something that is not too volatile. In that context, I think we are very happy to report that our India portfolio is done quite well. As you mentioned, now we are a $50 billion mark to market, including the value of our indirect stakes that we hold. And this number was, as you again rightly put, it was $37 billion last year, and less than half of this 5 years ago. The reason that we are so optimistic on India is because we believe that India has all the characteristics of a very resilient portfolio. In one manner, we are not very exposed to global uncertainty. Obviously, at the margin, we import all of our crude, and we have a sizable export book. But the portfolio that we are trying to build in India is mostly domestic focused. And that is doing really well. We believe that India has some characteristics, specifically, the large and young and very aspirational population that we have, the quality of our management teams, which is global best in class, policy certainty and predictability. And all of these things have caused India to grow. India is the largest, fastest growing large economy globally. Has been for some time and is likely to continue to be that. And I think our portfolio reflects some of that optimism.
Right. So if I take that a step forward and ask you what would this India allocation look, say 1 year down the line, and if there are going to be any new areas of interest for Temasek, can you give us any color on that?
Sure. So let me, just step back and walk through the evolution of our portfolio in India. We've been in the market for 2 decades plus now. As I mentioned, it's been our best performing market over the medium and long term for all of Temasek. And the reason that it is so is because there are some, we as Temasek, we invest behind 4 distinct themes. They are digitization, rise in consumption, longer lifespans, and sustainable living. And we find that all 4 of our themes find great resonance in India. The portfolio opportunities that we are seeing all are quite exciting, very in line with our thesis, and that's the reason that the salience of the portfolio to the global book has been growing steadily. About 2 years ago, we thought that we would invest between $9 to $10 billion into the country over the next 3 years. And I'm happy to report that, so far we are on track. Over the last 2 years, we've invested more than $3 billion each year. And looking at the opportunities right now, looking at the pipeline right now, I think we are confident that we will continue this pace of investing. Not just investing, but also the returns that we make from our portfolio have been very heartening. And that's the primary driver of the increase in the value of our portfolio from whatever it was, 37 billion last year to almost 50 billion this year.
So short-term exits from portfolio investments is something that's pushing up your exposure to India. Is that the correct way to put it?
It's not just exits, it's monetization, right? So, for example, when we hold a unlisted company, we value it at cost. And when the company goes public, usually there is a market cap is significantly different from cost, and that's why I'm saying mark to market value of the portfolio. So just to give you some statistics, the 37 billion going to 50 billion, almost 80% of that is just accrete in the value of the portfolio, and some of it is new investments that we've made over the last year.
Right. I would like to stay on the question of global economies for a bit longer. You mentioned about uncertainties on a global level, so let me build on that and talk about Trump's tariffs. So the tariff letters have been rocking economies around the world lately. We know Brazil, Mexico, EU, all of them have gotten letters. Brazil maximum 50% and 30 to 35% for the others. But no one is being spared, and now we are waiting as the India-US deal is just on the cusp of being disclosed. So from a perspective of investing in India, and we know there's a lot of chatter about what kind of a deal it will be, what is Temaseks' outlook about that? Is that going to affect anything with its portfolio in India?
So I think, look, that's a great question. It's unfortunately also a question to which I don't have a direct answer, right? We'll see how the tariff regime pans out, and I'm confident that there'll be a good deal struck between the governments. I'm hopeful, more than confident. But I think, as investors building out a portfolio in India, I think our endeavor is always to keep increasing the resilience of our portfolio. And so we've done some sensitivities, some scenario planning on, what certain levels of tariffs might do to our portfolio. And I'm happy to report that, at least from a first order effects point of view, we found that, there may not be a very big impact to the portfolio.
So what kind of an impact are we talking about?
I can't quantify it right now for you, but it's in the normal course of volatility, right? A large part of our portfolio in India is listed, and so we are subject to, values of our investments going up and down. It's not outside the normal range, And again, these are all scenarios.
So this is the best case scenario, you said, for the first order impact. So you've also likely calculated a worst case scenario if something happens. So how much of an impact is that going to?
I think again, I won't answer it directly, but broadly speaking, I think I can say that, we are comfortable with the range of outcomes that may pan out, right? Also, look, valuation or value of portfolio at a point in time, is just a point in time number, right? What we try to optimize for is sustainable long-term returns, right? And we, as you know, we invest off our balance sheet, right? We don't have a fund structure which has a defined life cycle, right? And so whenever there are pockets of opportunity, when we believe that the intrinsic value of a portfolio is greater than the market caps are implying, we can always buy more, right? And when it is higher, we can always sell, right? So it's a constant process of rebalancing. Therefore, I don't want to make it sound as if tariffs will permanently impair or enhance the value of our portfolio, right? It's a process, it's a journey, and not necessarily a point in time number.
Right. So next I would like to ask, since you touched upon it, your India portfolio, so you said most of it is listed, and
large part
of it is listed, and whatever is unlisted. So can you tell me collectively what the return has been? I mean, over the last year, we saw your annual report, but for the benefit of our viewers, and how much of a difference have you seen in your returns from your listed companies versus returns from your unlisted companies, if you could break that down?
So again, we don't disclose a large number of these of these statistics. But what I can tell you is that our portfolio mark to market basis, like for like, was $37 billion last year in India, and today it is $50 billion, close to $50 billion. And we have invested about $3 billion. So you can do the math on the value of how much the portfolio has accreted. Generally speaking, over the long run, we have made more returns from our unlisted investments than from our listed investments, and that is to be expected because there is a illiquidity premium that you can harvest out of the unlisted investments. But on both, we have, we regularly track how much alpha is being generated. So both parts of our portfolio have done quite well in India, but the unlisted part has grown slightly above the listed part.
So since unlisted returns are better for you than your listed returns, can we expect more returns coming in from your unlisted holdings than from your listed holdings going forward? Like, will your allocation to listed entities remain more or less unchanged?
So we believe that we are at a nice balance between unlisted and listed. And again, just theoretically speaking, the unlisted part of your portfolio is less prone to quick changes than the listed part, right? Because the listed part is liquid, you can buy and sell much more easily than you can on the unlisted part. And so from a portfolio construction point of view, from the desire to build a resilient portfolio, we like to keep a balance between both. Because if you see some trends and you want to pivot your portfolio quickly, the listed part allows you to do that much faster. And the unlisted part, gives you slightly better returns. So it's a balance at all points in time, and it's really opportunity by opportunity. It's not a top-down objective that I want X% in listed and Y% in unlisted. It is here is an opportunity. What does it do to the portfolio if I invest or if I divest? And therefore, the percentages of listed versus unlisted are really an outcome and not a input metric.
Right. So since we are on the topic of investments, I would touch upon two of your very recent and talked about investments. The first of them will be the Manipal Deal. So recently announced, and there were media reports about how it is going to be funded. So they are saying that for $470 odd million of debt is going to be raised through banks by Manipal. So I was wondering if you have any comments on that. And since Manipal is backed by Temasek, is it necessary to get the money through banks and not directly through the holding company?
So look, I will not comment on specific situations. I mean, this is a decision that every company of ours makes. What is the right capital allocation? What is the right amount of equity in the business? What is the right amount of debt? What I can say about Manipal is that, we've been invested in the company for a very long time. We were minority shareholders for more than 5 years before we decided to increase our stake and become controlling shareholders. And it resonates really well with the theme of longer lifespans. As affluence rises, as unfortunately disease prevalence gets higher, as the level of awareness among consumers of what is right diagnosis and what is right cure increases, we believe Manipal is really well positioned to ride on this trend for a very long time. Right, the clinical outcomes that we've seen, the quality of the management are all global best in class, and therefore that was the reason we decided to increase our stake in Manipal, and we are quite confident that that it will keep doing well for us for a very long period of time.
So as a controlling shareholder in Manipal, why not give them the capital for the acquisition rather than let them go to the banks for the deal?
So look, like I said, it's a very case-by-case decision. We have invested more equity into Manipal in prior situations. In this situation, maybe the right capital allocation for the company is different. Right? Again, I'm not confirming or denying your numbers, but it's really a decision that is made at the portfolio company level by its management and its boards. Right, so we are supportive, and if they ever need equity capital, we'll be very happy to.
Right. So now I'll touch upon your second very famous investment, which was the 10% stake in Haldiram's. Again, you will tell me that I can't confirm or deny the numbers, so let me put them out myself. 10% for around 8,500 crores is what everyone has gone with, and there has been no denial or acceptance by Temasek again. And there was a lot of back and forth involved. We know at some point a lot of private equity firms are involved. Other than you, Alpha Wave has also come in and acquired stake. So I want to understand what kind of backdoor negotiations were happening at Haldiram's, because very complicated structure, two companies merging and then investors coming in. So what was the opportunity that Haldiram's presented for Temasek, and what kind of negotiations had to be done to reach this level where we see you at a 10% stakeholding?
So look, I think just speaking about our thesis on Haldiram, right? Temasek has been a very large investor in the food space in India, right? We've been large investors in Zomato, in Devyani, in Licious, in Healthcart, in Rebel Foods, in Country Delight. And all these investments have done really well. So the theme of investing behind food, has done really well for us, and we believe that, it has the potential. It has many more legs to go. Haldiram is a name that is almost like a household name. The brand is very old and very has a lot of love from customers. All of us have consumed Haldiram products in the past. It's got really strong distribution. It's run very well, and the potential is enormous. The deal was hotly contested, as you are right. We believe that we had. First of all, we are super grateful that that we have the opportunity to be with the company over its next phase of growth. And we think of ourselves as as owners of the company. We are not investors that we are investing for X number of years. We are owners of the company, and we will continue to influence and shape the future of the company going forward. As is natural, such an attractive asset would be contested quite excitedly and aggressively by multiple funds. And we believe that that we could demonstrate that we would be the right partners from a long-term point of view, from a value addition point of view, and so it's a story that that I think you will hear more about as you go forward, and I am quite optimistic that it's going to turn out really well for all stakeholders involved.
So, is there a plan on increasing the Haldiram stake further beyond this?
We can. I mean, it's not required at this point, but as and when the opportunity arises, we will evaluate it.
Right. And since you also mentioned Devyani, I'd like to ask again. It's been clarified by both companies, but there was buzz about a Devyani Sapphire merger that was likely to happen, and you said portfolio companies deal with such things on a company level. But can you give me some insights onto that?
I cannot tell you anything more than what the company has.
Right, and I would like to also check on you about the growing, again moving back to the global front. So there are reports about investors being scared of a global recession of like situation happening, and constantly reallocating, readjusting portfolios to make sure that on a country level the portfolios remain resilient by themselves. So is that something that scares Temasek also, because it's a state-run investment company?
So look, I think as prudent investors, as owners of our capital, as stewards of our capital, right? It is our responsibility to always keep calibrating and to keep optimizing for sustainable long-term return, right? And we keep doing that. I think you're right that at this point one of the key risks to portfolio values is global uncertainty, right? But if you break it down, I think the view that we have globally is that the US has seen now some fiscal stimulus, inflation is coming slightly under control, and so and growth has been quite resilient, right? So we have a slightly more positive view now on the economy than we had before. Similarly, China has taken a number of steps domestically. This year I think they grew at 5% on a real GDP growth basis. India has done quite well historically and continues to do so. So I think it would take me too long to give you an answer about every single economy, but I think our objective of continuing to deliver sustainable long-term return stays constant, right? So it doesn't change. And every country, like you said, we are trying to increase the resilience in our portfolio, right? We are trying to make our portfolio companies less susceptible to global shocks, and also to improve the range of outcomes and narrow them further.
And again, if we are talking about valuations when you come to India, so we've been asking this to every holding company we go out to. Valuations, do you think they're still expensive or have they come down in this correction?
So I think, look, valuation is a tough question to answer, right? If you look at the index as an aggregate, it is trading at, I think, about 23 odd times PE, which is slightly above historical averages, medium term or long term. But the beauty is that, we don't invest in indices, right? We invest in, our portfolio is very granular, right? It's single companies that make up the portfolio. And so our job as investors is to always find the pockets of fair valuation or undervaluation and invest behind those. And where there are pockets of overvaluation, we can choose to trim our stakes. So I think looking at the portfolio as a whole today, I think we feel quite confident that our objective of sustainable long-term returns will be served well by this portfolio. And for the new opportunities, we have to find the right opportunities and negotiate well so that we come in at reasonable multiples.
So new opportunities, I mean, you're already into consumer, media, tech, agri-food, all these sectors, but NBFCs also. Are you looking at any opportunities beyond these sectors in India?
So I think, historically over the last 20 years, we've been investing behind our 4 themes. And I think a bulk of our future investment activity will continue to remain the same, especially because it's also done quite well. But I think at the margin, there are always new areas to explore. AI is one of them. And when we talk about AI, we invest, everywhere in the value chain, whether it is chips or the hyperscalers or the innovators or agentic AI or what have you, right? All the direct investment, or most of the direct investments we have today in AI are mostly based in the US. But how we are trying to utilize AI in our portfolio in India is to use it as a horizontal, right? To encourage our portfolio companies to use AI to become more relevant to their consumers, to improve their efficiencies, to build more resilient supply chains. I can talk about a couple of examples. We have an IT services company called UST Global, right? UST Global is trying to be at the forefront of using AI, both in how they run their own operations and how they build efficiencies for their customers. And there are many such examples, which our portfolio companies are using AI and becoming better than they are.
So currently there are no plans of directly investing into AI first firms in India. Is that what you're saying?
No, I think we are looking for opportunities. As and when the right opportunity comes, we'd jump on.
Other than AI, any other segment that seems opportunistic?
So at this point in time, I think it is the industrial space as a whole, because of opportunities as well as the risks that may come up from geopolitics. We believe that it could throw up some opportunities. And so, we have a reasonable sized portfolio in industrials, but we are, looking for more opportunities. Similarly, in all the digitization in consumption in the healthcare space and in the renewable space.
Right. I would like to ask you one last question, and it's about Manipal again. So there's an IPO somewhere down the line, 1 or 2 years down the line. We've also reported it, everyone's reported it, and the valuation is around 7.5 to 8 billion right now. Don't know what it will be 2 years later. But let me ask you if Temasek will be looking to, what part of their stakeholding will Temasek be looking to trim through the IPO?
So look, I think these are very topical decisions, right? When the company decides to list is going to be is a decision going to be made by its board and its management team. It will depend on, what kind of capital the company needs, what's the right capital allocation, what market sentiment is. It's going to be a mix of many things. So, as long-term investors, we continue to always want to do the right things by our companies. It will list when the time is right. It will list at the value at which it will list. And at that point in time, we will evaluate whether we want to increase our stake or maintain our stake or maybe sell some.
Any other portfolio companies that you're looking to get into the listing mode?
So there are a number which are in the process. Even if you look at, on a 12-month look-back period, we listed Dr. Agarwal's Eye Care, we listed Niva Bupa, we had a secondary transaction in O2 Power, right? So the cycle of investing, improving, and monetizing is working quite well. And as and when newer vintages get ready to list, we will endeavor to list them.
I am assuming you can't give me any names right now.
SEBI doesn't allow it.
Right. That were all of my questions. Mr. Srivastav, you've been very kind to answer them. Thank you so much. Ladies and gentlemen, you're watching NDTV Profit, and stay tuned for more news.